I want to first welcome everyone to the Must Know Blockchain Use Case Series. It's a series of webinars that is co-hosted by Thoughtworks and BSN. In this series, we invite various frontline blockchain experts to share their insights and hope to bring different experiences to the public and enterprises to further understand the application of blockchain technology. For the third episode today, we're going to talk about how blockchain technology has impacted the financial services sector. And we have today three panelists joining us, Rick Lee, Frank Liu, and Shangqi Liu. I'm Tim Bailey. I'm with Red Day Technology, and I'm here to host the series. To start off with, I'm going to invite each of the panelists to introduce himself and his background and the work that he's doing in blockchain. So let me first start with you, Shangqi.
Thanks, Tim. I'm Shangqi Liu. You can call me Shangqi. I'm the head of blockchain at South China, as well as the general manager of South Hong Kong and Macau market. So it's really glad to return to the webinar and continue discussion with Tim around the blockchain now on the FSI space and meet some new friends. I will then pass the introduction to Rick.
Rick?
Thank you, Shangqi. Good evening, good afternoon, and good morning. My name is Rick Lee. I cover the supply chain, retail banking, and insurance healthcare for digital asset in APAC. So before digital asset, I have been with IBM Accenture for quite a long time. So thank you for having me.
Great, welcome. Frank?
Hi, this is Frank. Yeah, my name is Frank Liu, and initially I think I started with blockchain, and then I created the blockchain, basically the Hyperledger Fabric, while I was with the IBM, serving the Fabric's first product manager until later on I joined Ping An. Set up a few projects. I think one in Hong Kong is called eTrade Connect, which is the work between Ping An and the Hong Kong Monetary Authority, which I was the basically chief architect for that. And a few other projects, including there's quite a few, I'm not going to name them. And after that, for the past year or so, I've been doing something on the cryptology. I can't really say, disclose it right now, but hopefully soon. Exciting stuff.
Okay, good. So you're being cryptic about your cryptology project.
Well, there's something, I'm under legal.
Okay.
There are legal reasons I cannot disclose anything about it yet.
Understood. Good. Well, we're excited to hear about it when you can talk about it. So let's jump right into it, guys. I'd like to hear from each of you what kind of blockchain based applications and digital asset applications you're seeing in the financial services industry today, really from where each of you sit from your own perspective. Maybe Shangqi, let me start with you.
Yeah, for the blockchain application and blockchain-based digital asset, I would say for sure. So far, I would say cryptocurrency is still the most disruptive digital asset. After all, everything starts from Bitcoin. But indeed, Thoughtworks, we have partnered with some clients in FSI sector on blockchain exploration. We did try to use blockchain for scenarios like cross-border payments, clearing, and settlements. We're trying to pilot blockchain for contract for communities and to trying to transfer some securities and bonds on the blockchain. And we did make some breakthrough. We even make some crypto wallets for very conventional banks. We see scenarios like supply chain finance and trade finance eventually proven for blockchain application. And we did see great partners like Counter, which has greatly reduced the friction in global trade by digitize the letter of credit using blockchain. So, but of all these areas, we didn't create any new asset types. We're still trying to using blockchain store and transfer very conventional financial assets. We just use blockchain to improve the transparency, liquidity for these assets. But if you look at the development on DeFi world, look at the very innovative blockchain-based financial derivatives, you will see out. And I don't really want to endorse for very specific coins or DeFi products. So I will pass the topic to Frank, maybe.
Frank, what are you seeing? Other than the project that you're working on, which you'll talk about at a later date, what are you seeing? What types of applications are you seeing in financial services?
I think I kind of agree with Shangqi. I think he covered quite a bit. I think the most application we see today are still really around supply chain finance. I think one of the reasons is because there are quite a few players and there are a lot of opportunities for fraud due to data silos. So that's why I think there has been a lot of, another reason is it is a relatively, what we call blue sea field, which is relatively open, and there are still problems, there's still competition, it's still evolving market. So people try to use a new technology to get to generate more hype for to get a hold in this new market. So we see a lot in supply chain, and supply chain is still mostly around the integration of data, because I think what we should do is we not try to look in the blockchain is like what the technology can do, what a consensus can do, what a cryptology can do, but rather what we actually try to do from a business sense, which is really about integration with data. And I agree. The other part is we see a lot of, the real killer applications may still be in the cryptocurrency space, which may not be legal as of yet. It probably not will be, at least for the medium term per se. But for now, we see like most of the use cases are around supply chain finance, and people try to use blockchain as a kind of a network to integrate data between multiple participants.
Rick?
Yeah.
What are you seeing?
Yeah, I agree with Frank and Shangqi that a lot of when people talk about blockchain, they usually talk about public blockchain, right? Usually on the crypto side, NFT, etc., etc. So I pretty much want to focus more on the application on the enterprise side of blockchain. So Frank and Shangqi talk about trade finance and even on this supply chain kind of track and trace, all those applications, right? But you think about that, actually the use case for blockchain in the enterprise space, in addition to the features offered by the technology itself, including auditability, traceability, immutability, single source of truth, etc., etc. Actually, we are looking at a set of technologies that can handle multi-party workflow, right? And also a clear data segregation among different parties in the blockchain network, right? And also we have strong governance in privacy and also security. So, and also one of the typical use case that we see in blockchain and also related smart contract technologies is like the tokenization of asset, creating a digital twin of the asset in the blockchain network, so that we enable the capacity to bake a full lifecycle automation to the tokenized asset. And we are also able to have the opportunity to wire the traceability and provenance into the asset. So the typical use cases that we see in the capital market includes like transaction clearing and settlements for exchanges, for stock exchanges, and also life cycle management.
And so can you talk a little bit more, Rick, about what specifically digital asset is doing in the space and what types of customers you work with?
Thank you for asking. So what we do is our core technology is the smart contract technologies, and our technology can run on, we are chain agnostic. So which means that our technology can run on any kind of implementation of blockchain, and also including silo databases as well. The reason is, like most of the customers today, they want to walk the smart contract journey. They want to walk the blockchain journey. But more importantly, they want to start the automation journey today for multi-party workflow. So the old days is that they wanted to choose, oh, I want to choose some kind of blockchain technology, and then based on the implementation platform that the blockchain network offer, then they are stuck with that platform. So our approach is different. We pretty much take the Java approach, where we focus on dealing with the business processes first, and implement the business processes in the smart contract layer. And then we have all these kind of connectivity driver to connect different kind of blockchain networks, or even including silo databases. To answer your other part of the questions, most of our customers, they are on the capital market side, including 5 major stock exchanges out of the 10 stock exchanges. And also we work with investment banks and like Goldman Sachs, and also we have customers like BNP Paribas, and also HSBC, etc.
Okay.
Ricky, actually, I'm quite curious. Is all your customer based on FSI sector, or when we talk about digital asset, it doesn't need to be a financial asset? Just a question. Yeah.
Thank you for asking again. So I think I would say like 90% of our customers, they're on the financial side. So like what I mentioned is they are like doing for the exchanges. Usually they make use of our technology to do post-trade settlement and clearance. And for example, with our recent announcement with Goldman Sachs, like 1 month ago during the Hong Kong FinTech Week, they make use of our smart contract technologies to tokenize their structured products and then manage the life cycle. But the rest of the 10%, they are more on the non-finance side, like what you mentioned, supply chain. And also we also have a project working with one of the telcos in APAC to tokenize the network ports of the telco, so that they can be essentially traded with their business partners. So also we are working on the green or / ESG side, and for example, we will be working with one of the car parts. I can't be too specific on that, but we want, because for some of the car parts in the world, there are a lot of counterfeits, right? So we are working with them to track and trace the raw material and the logistics of all those car parts, to make sure that there's no counterfeit, to reduce or minimize the counterfeit in the market. So on the green side, we are targeting to do some helping our customers, like what we've done with BIS and Hong Kong MA, the Hong Kong Monetary Authority. So there was a project that we worked with them on the green bond issuance, and also and on the ESG side also, we are going forward to hopefully we can contribute to the environment, on some carbon registry auditing, etc., etc.
Good. Frank, a question for you. I know you worked on, were one of the early people helping to create Fabric, Hyperledger Fabric when you were in IBM. Can you talk a little bit about what are the, if someone is new to blockchain, new to the technology, what are the attributes of blockchain that make it, potentially game changing for the financial service industry? Can you talk a bit about that?
Well, thanks, Tim. I think a lot of our humans, like our thoughts evolve over time, right? So what I used to think 5 years ago is not necessarily what I think now. But I can I can share some of my thoughts now.
I would actually be, I think our listeners would be interested in understanding where you started and where you are now in terms of your thinking and why it evolved.
Okay, well, that's cool. Yeah, in the beginning, it was really just because I think there were actually a book published about the early days of blockchain, including our story at IBM. In the beginning, we really just look at it as a distributed database with immutable proof of record. I think that's basically how everyone got started. And I was with the WebSphere division, which the middleware, the IBM Java middleware, and the reason why blockchain got us interested is because it does transactions, and the IBM middleware division, we create products that do transactions, including business process, the workflow management tools, the Java web server, and a different distributed system that we used to sell at IBM. And then a smart contract, look like some sort of a business application that can run on top of a data system. So that's what got people interested. But as time evolves, I see that there are two types of blockchain applications. The one that really got popular in the public blockchain space is really around cryptocurrencies. And quite honestly, it's still probably the most successful, or you can even argue the only killer application that's really out there. But like right now, for people new to the blockchain, like I'd rather not to tell people like what to think but by looking inside the technology, because technology do evolve. What you see today is not necessarily what you used to see 5 years ago. We do a lot of things differently today than we did 5 years ago. So we see the things at a higher level. See what actually made cryptocurrency so successful, more successful than in arguably central bank digital assets. And that's really because if you look at a high level, it's not about the technology like consensus, zero knowledge proof. No, nothing. Is it really about technology? No, not necessarily. These technologies create opportunities and create attributes, but only if you can leverage these attributes, then you may create something new. And what makes digital assets so successful, a digital currency so successful, is it's about distribution of a clearing right. Like now you issue a asset, it's not something like I issue an asset and somebody else can clear it for me. It's like this country issue a currency, but other countries, the banking system can actually do the clearing. So that's actually made the difference. Can a central bank create a central bank digital currency that allow other countries' net banking system to clear their currency? It's hard to see at this moment, but that's what really drives the popularity of digital assets. It's because we talk about decentralization, but what it's actually been decentralized. It's the right to clearing right that's been decentralized. It's been distributed to your peers. Can CBDC be distributed? The clearing right of CBDC distributed to another country? I don't know. It's hard to see at the moment, but it's something that worth to put an eye on. So that's one part. But the second part is it's really about distribution of data, because data already as they are today, they are already decentralized. Like every system has their own data set. Every bank, every organization have their own database. So they are decentralized. Why we're seeing a lot of applications around supply chain finance or trade finance? Because these decentralized data create data silos, and data silos the data silo cause frauds. Frauds happen because data silo, you can't cross-check data. So the opportunity I see blockchain is one, you distribute something or you integrate something. So distribute something, you distribute your own leverage to share that to others. So making other people a shareholder that has power of your data network. But the second part we look at is something that I've been focusing on is about integration of decentralized data. And that's, you can arguably, that's why there's so many things around the supply chain finance and why there's so many research around the cryptology space. I think what blockchain really drives the research is not necessarily the consensus, because the consensus hasn't really evolved over the past 5 years. I mean, it's there, but you can get it slightly better, but you don't change the physics around it. But it's really the cryptology, because it's about integration with data. If you can leverage the data, not only your data, but you can leverage your data with others, somehow making the data integrated and work together and create something, and to cross-check or cross-validate a trade, a purchase order, or you do something even more fancy, like run machine learning on multiple people's data. So that is actually what generates benefit. So why tell people new into the blockchain space, I tell them there are two spaces. One is the blockchain, that's about integration, distribution of clearing rights to your peers. Another second part, which is I think more private players can get into, is the integration of decentralized data. So I think that's two ways to look into to understand the blockchain. I think to sum it up, it's to understand the blockchain is not to necessarily understand the technology, but understand what's actually creating the benefit. Yeah.
I agree with Frank, because the blockchain is like a buzzword like 5 years ago or 6 years ago. Like Frank mentioned, when he was in IBM, people were talking about WebSphere, middleware, system bus, integration, all those kind of things. But as time evolves, and today the business requirement, the business world, the changes in the market dynamic, all those technologies might not be able to address all those requirements, right? So that's why the emerging of the blockchain technologies people see the business value in it, and then they understand that with the decentralization of data, actually no single party owns all the data. Actually, everything, all the data are distributed among all the participants of all the within the blockchain network. People see this value, and then the adoption of the technologies are starting to increase, including on the finance side, and also like what Frank said, is also on the supply chain side, trade finance side as well.
Yeah, actually, for some friends that are new to this space, I actually introduced them to see the code of Uniswap. It's quite simple. It's not very much line of code. And if they are not into this domain, they don't have such domain expertise, I would recommend to see the source code of the smart contract of Formal 3D. It's imaginary, just to see normal code and you know how it works, and you would wonder, you would start to rethink that how does the conventional financial system runs nowadays? Why we need so heavy institution? Why we need so heavy process? And if we can implement such logic in such simple code, I think that's quite straightforward way to trying to understand blockchain. But of course, you need to know the underlying technologies, consensus, cryptos. That's quite big topic.
So we're talking about financial services and how blockchain is being used in financial services. One of the things that I think people would be interested in is how will these changes in the financial services industry using blockchain technology. How will that ultimately impact consumers, the average citizen who interacts with the technology? Is it going to make their ATM machine work faster? Is it going to reduce the queue at the bank when they go in and do something there? What's the real impact to a consumer ultimately?
Well, I can start from a very negative impact that the bankers may transfer the obligation to consumers, that to claim that you have the full ownership of your currency, and if you lose it, you lose it. That may be one very negative feedback.
And we've all heard the horror stories of people forgetting their hard drive password and losing all their Bitcoin or accidentally throwing their laptop in the rubbish, right? But how will it benefit people? How can it?
I think
I was please Rick.
Sorry, go ahead, Shangqi.
Yeah, I think I can start firstly. It's more about the ownership. Like nowadays we talk about the metaverse. In a digital world, how we can claim the ownership of asset. I think that's quite critical to us. So blockchain and the crypto asset gave us back the ownership of our own assets. I think that's the key. That's very persuasive for me and persuasive for a lot of people. So Rick, please.
Sorry for the interruption. So I guess the question is not how blockchain impacting is in addition to how blockchain can impact the customer. I would think it on the other way, that what the customer wants, what the business wants, what the market wants. They actually these days they want more. They want like in the old days, they want a T+2 settlement. Actually, they want to do a T+0 settlement now. They want security control. They want good governance, and they want a high SLA instead of, like, for example, in the insurance world, where you do an insurance claim, in the old days it was like 7 days or even 2 weeks to get it settled. They want an instant settlement to settle their bills at the hospital and at the clinic. So this is and we are all living in a very dynamic world and with fierce competitors in the market, right? Especially in this pandemic situation in the world, the mode of living or the mode of working is some kind different. So they want something new to address what they can do, right? So blockchain, I think, is the blockchain technologies, I think is in a good timing to emerge as to serve all those demanding requirements by the customers and by the business.
Good. Frank, do you have any thoughts on that? How it, what are the ways that changes in the financial services industry can actually impact the average citizen?
Well, I think by the end of the day, it's about how banks servicing the client, servicing the citizens. Better servicing means they can better assess your capability to determine your rate and how much money they can loan to you. Because I mean, by the end of the day, the trouble what people really are facing, because by the end of the, first of all, the banks have money. I mean, you get money from the bank, so it's really trouble people when you have the capability to return the money, but you cannot. But somehow you cannot convince the bank to lend you money. That's really painful. So by the end of the day, it's about give the bank the better capability to determine whether they're making the right choice and help assisting banks to make the better choice. And how do you do that? I think this is something I'll always return to, is about integration of data. So assuming doing by crossing-checking your data with your data in my bank with your data in others' bank without losing the sensitivity of the data. So that requires advanced cryptology, and also be able to run big data analytics, which basically machine learning statistic algorithms on data, not only on your banking your bank's data, but your bank's able to run the check on multiple banks' data, but without really losing the data to your competitor or your peers. So using the blockchain and other data integration technology, including federated learning and different type of zero knowledge proof technology to better integrate data, the bank should be able to, or what you want to do is make bank have a better set of data to work on when they assess you, when they help you, and when they lend you money or not. So I think that's ultimately that's how the blockchain or other related technologies help consumers.
So by letting banks, enabling banks to more accurately assess a consumer or citizen's ability to pay back a loan, but also do that faster, right? Because they have access to more data.
I think I think everything electronically connect are fast. If you can electronically connect to another bank, I think one guy is asking in the chat room, like this one project, how is using R3, and they decide how they integrate the consensus Hyperledger. And the short answer to that, which is related to this question, is it's always API to API connection to get system connected. So when you have things electronic connected, you can't do it fast. I mean, it's going to be in a matter of a fraction of a second to get a response. But the differentiator is whether one entity can amass more data from more people. So you have a bigger data set to work with, to analyze before they're making these decisions. Because we're moving to a data-driven market, and whoever owns more data or has access to more data would have more business opportunity. I mean, making better. I would say be able to make better judgment.
Yeah. Okay. Good. Well, let's actually take that question now. There's I want to elaborate the question a little bit more, and thank you to our friend and partner in Turkey for asking this question. Some banks often use R3 from Corda, and then they may be working with either another entity or another company that's using a different protocol, whether it's Fabric or Quorum or even a public chain, a permissionless chain. So how do you guys think about those interoperability issues between different chains?
Maybe I
Rick,
start first.
Rick, why don't you take it? Because you guys are protocol agnostic, so you must get asked this question a lot.
Yeah, thank you very much. So in addition that we are like protocol or blockchain agnostic, we are also our technology can enable cross-chain or interchain interoperability. So this is one of the reasons that our customers this is one of the reasons that our customer choose us. In addition to chain agnostic, also our smart contract application on one chain. In this case, like the question that we have in the chat box on R3 can actually talk to the smart contract application on, for example, a Fabric. So we are not talking about the only these two chains, but all the blockchain that implementation that we can support, right? So I guess the technology is already there. So is the 80-20 rules, 20% is on the technology. Okay, we solved that problem. So 80% is on the business. Our organization in the business, they are creating silos, they are not talking to each other. But if you think about that, if the characteristics, the reason why we have blockchain is having all this decentralization with control, security, governance, actually all these different kind of blockchains, actually they can connect to each other with trust, right? But to answer the question of in the chat box, yes, the technology itself, we can enable it today. We can make that happen today.
Well, for this question, actually, as always, we are also, protocol agnostic, and we're trying to build projects through Hyperledger Fabric, Corda, Quorum for different projects. And there's a very usual question we got asked from our client is, can you provide some kind of cross-chain solutions, cross-chain protocols? And we usually figure out when these questions are raised from a bank, they usually talking about cross-chain, between different version of Fabric, different Fabric chain instances. They really talk about the cross-chain between Fabric and the Corda. So that's not a common case we face. And for sure, we did some POC to build the custodian bridge between Corda and Fabric, but that's kind of still need some kind of like third-party notary node to endorse for the transaction to make sure that we lock one asset on one chain and to create another asset on another chain to make sure we have this atomic swap. But I would say technically, like Frank said, it's basically API to API. We do this stuff, and we may rely on. We cannot be so decentralized. We may rely on parties to endorse for the transaction. But that even got me to another thought. Maybe we don't even need to do the cross-chain asset transfer. Maybe we can just rely on some, protocol agnostic. Like identity. If we give the user some DID, we can claim this DID to have such asset on such chain and another asset on another chain. Maybe when we don't even to do the cross-chain asset transfer anymore. So that's my thought.
Okay, good, thank you. I want to shift gears a little bit, guys, and all of you are based here in Asia right now, but your organizations have global customers all over the world. I'd be interested to hear if you're seeing any regional trends with regard to blockchain in financial services. Are you seeing specific trends here in Asia that may be different from what we see in Europe? What are you seeing?
I think I can try to start on this one. What I do see in China, I think what China's unique I think that China, US, they're both unique. US is more, I also has bigger balls to play in the cryptocurrency space. And it's more adaptive, and it's have more access to more advanced scientific science, such as advanced cryptology research is more pervasive in the United States, and the access to the people with knowledge. There's simply more people with the deeper understanding of cryptology than here in China. But the unique advantage for China is that things tend to move really fast. And one thing I do see, in China, like people try and fail and move to another direction. If this didn't work, go out and move to another. So I think in China, what I see is more and more blockchain companies these days are moving into federated learning and multi-party computation space. So I think it's just a bigger understanding of the cryptology side of the game is because by the end of the day, it's about integration of data. Otherwise, you're just creating databases for your client. So yeah, I would say the trend in China is definitely moving into the advanced crypto stuff. Crypto doesn't mean cryptocurrency, means cryptology.
Yeah, also similar observation, like in China mainland, I'm seeing the companies, blockchain companies, I would say a lot of blockchain projects actually merging into, data space, IoT space, privacy computing, privacy protection computing space. We can hardly to see a project is a pure blockchain project like we did years ago. Nowadays, when we talk about some company conduct a blockchain project for government, for example, you will see if you look at the architecture, you will see mostly they are some kind of data consolidation project. It's not like blockchain project like we saw before. And for the US part, the Silicon Valley is definitely a very strong force back on crypto side. And there's the folks from my network, they all see that US government is more courage, the capital market to drive this force. The government don't want to get involved into this. And for the EU side, I would say the clients, the friends, the network, they don't have very strong power like China government, and they don't have very strong capital like United States. I would say from the EU side, I see a more healthy communities there. They are more driven from the business use case, and they are more open to the the tokenization adoption. Of course, they are more focused on the privacy part, especially on the decentralized identity. But still, the EU side, I say it's more sustainable approach.
I think Frank and Shangqi, they have talked about China. So in APAC, other than China, we see a lot of movement or initiatives on the green side. Not talk about other countries. Let's talk about Hong Kong, where I'm living. So according to Nicholas Argazan, the carbon offset credit auditing of the Hong Kong exchange, there are as many as 90 ESG bonds were issued this year, raised a combined of 34.62 billion US dollar, which is 4 times what was sold last year. And also Eddie Yu, the chief executive of the Hong Kong MA, the Monetary Authority, the cities, our government has already issued more than 7 billion US of green bonds. So this is Hong Kong. The rest of the countries in APAC, they are going more on the green side in controlling carbon emission or moving forward to carbon trading. So they are thinking of making use of smart contract or blockchain technologies to manage all the life cycle of all those tokenized assets, including creating a green or carbon registry, and for carbon emission auditing, carbon credit trading, and also settlement. So all these, we are working on quite a lot of initiatives in the region. So this is what we see.
Very good. So last question for you. Frank talked earlier about what he thought about blockchain 5 years ago and how he thinks about it differently now. So let's now look 5 years into the future. I would be interested in each of your perspectives on, what changes you see in the financial services industry in the next 5 years and 5 years from now that are being, created or driven by blockchain technology.
I can try, because last time I remember we also trying to make the predictions. So for the next 5 years.
And I wrote your prediction down last time, Shangqi. So we'll
really?
I'll call you in 5 years if it comes true.
Let's see. So for this, if they look at for the next 5 years, I foresee that more asset will exist and transfer in the digital form. mostly that may be supported by blockchain, because like Frank said, it's all about data integration. It's all about how do we consolidate data silos together, and we may start from the very basic distributed technology, trying to break through the data silos across financial institutions, trying to achieve the data consistency, trying to achieve the data integrity, and trying to sync them in real time. We may start from very basic API to API protocol to do that, but eventually we will figure out that we are trying to reinventing blockchain and distributed ledger technologies. And another thing, I will foresee that we may see more native crypto assets that will be included into the regulatory framework. So I cannot imagine how that may work for MakerDAO or Uniswap to be to be consulted by regulatory, but still, I think if we want to see the wider adoption for crypto world, that's a necessary step we need to do. And also my prediction will see for application, blockchain application in FSI space, I would say token may play a bigger role than the smart contract. Although digital asset, you are build asset on smart contract, but my personal argument we may over evaluate the importance of smart contract, because we do have a lot of good hope for them. And you can also argue that ERC20 or NFT is still kind of simple smart contract, but I still hesitate to put more logic into the smart contract, to trying to model those very complex business logic. But tokenization in a very simple way, very transparent, storable, and easy to transform way, I would say the tokenization may play bigger role than the smart contract in the financial space. So that's my 3 predictions.
I agree with Shangqi, because tokenization is one hot topic that is still growing, and people see the business value of tokenizing all those assets and making use of smart contract or blockchain technologies to manage the life cycle. It does really bring the business benefit to enterprises and also to clients. So also, of course, I don't have a crystal ball to see what will eventually happen in 5 years, but from our perspective, at least, we are seeing our clients having a initiative to, like the question in chatbot, to have connected networks to further increase the business value, right? So what does that mean? Today, the enterprise is running its own network, but is business partners or is trading partners, even though they are running on a different blockchain networks, again, with the technologies today, they see the business value of having all these different kind of network connected together with data sharing among all these different like a consortium. So this is a macro view. But from a micro perspective, so as I mentioned earlier, customers or business requirement are getting more demanding, right? So we are all living in a very customer-centric world. We want to solve business problem as much as we can. So we see in the next 5 years the demand for real-time or even real-time service level. This is one of the critical factor that to determine whether your business is successful or not. And also reacting to market changes or reacting to the dynamics of the market or even competition. So you need to have a solution that you can have a quick velocity for deployment to react to the changes. So all in all these from a again, like what I mentioned, is the 80-20 rules, right? The 20% on the technology side, we are ready today. People or enterprises, they understand that the technologies are here today. They can make use of it, and then they can derive the business value out of all this technology. But on the other 80%, they are working very hard, try to break all those organizational silos and to see how they can be more competitive in the market.
Good. Frank, I'm going to give you the last word on this topic, predicting in 5 years. How is the financial services industry going to look different because of blockchain?
Well, my pleasure. I think I said, I pretty much commented earlier. I believe by the end of the day, it's about ability to better integrate data. So, and in the big data century, it's all about data, the size of data, amount of data, and the access data that you have. So the blockchain industry has evolved from 5 years ago. I mean, I'm speaking aside of the crypto space, cryptocurrency space. Blockchain has evolved. Then 5 years ago, it was only about smart contracts, and now we start seeing people talking about integration of data and while keeping data private. And while the technology is somewhat there, but there's still a lot of works and advancements made in the cryptology space, especially how to make data, the machine learning, the federated learning, multiple data sets, multiple data entities more efficient. There's still a lot of work in academia that's been made, and I believe the trend will continue. Although I do believe the technology is almost there or pretty much there. The last man who shot the goal is not necessarily from academia, but it's actually from the business itself. And then the requirement comes from real life experimentation. So I do believe 5 years from now, you will see more the actual more integration of data beyond what we have today, which is still pretty much API to API. And we'll see more collaborative work on data that belong to multiple parties 5 years from today. And we'll see more, I believe we'll see more real life adoption to advanced crypto and the federated learning technology to the data integration space. And the blockchain will be used as a part of the general solution. I think as others, I think it was Shangqi has mentioned, it's not going to be the integrating data across different participants, not going to be a blockchain alone work. It's going to be an integration of technology. But by the end of the day, 5 years from today, we're going to see more integration of data. Banks have better ways to integrate data with other banks and provide service based on bigger set of data. Yeah.
Great, thank you. Well, Frank, Rick, Shangqi, I want to thank all three of you for joining the panel today. I think we all learned a lot from your insights on the use of blockchain technology in the financial services industry. And thank you again for all for joining us.